Welcome to BRICOIN, where global power meets your wallet. I'm Adam, and today we're peeling back the layers on the one force that runs a world: money. For 2 millennia, the story of human wealth has been a predictable cycle. A discovery sparks an obsession. Obsession fuels an investment mania. And the mania, driven by the primal human thirst for the ultimate shortcut, ends with the inevitable, chilling sound of a breaking wave. We believe we are masters of the cycle. We call the new epoch the Fourth Industrial Revolution, driven by the ethereal power of artificial intelligence. We hail the 7 titans, the Magnificent Seven, as its architects. But look closer. Don't look at the sleek server farms or the dizzying stock charts. Look at the architecture of the capital flowing through them. The belief that money is the center of humanity is not philosophy. It is a law of physics. And in every great financial acceleration, from the 17th century tulip mania to the dot-com bubble of 2000, the structure of that money, the very fabric of the market, has been stretched and distorted into a singular, dangerous shape: concentration. Our thesis today is not that a bubble is forming. That is too simple. Our thesis is that the AI revolution is fundamentally weaponizing capital concentration, forging a structure of wealth and power more centralized, more integrated, and more geopolitically volatile than any financial mania in recorded history. It is an algorithm designed for empire, not for equity. To understand the speed of our current trajectory, we must first study the flight path of the last great mania, the dot-com epoch. In the late 1990s, the future belonged to the internet. Money flowed like a torrential river into every company that dared to affix a .com to its name. By its peak in March 2000, the NASDAQ 100, the heart of the tech fever, reached a dizzying forward price-to-earnings P ratio of nearly 60 times. The market was pricing in decades of impossible growth for companies that often had no profits, sometimes no revenue, and occasionally no discernible product. It was a carnival of irrational exuberance. But the key structural difference, the crucial warning sign we must heed now, is not valuation alone. It is gravity. In 2000, the market center of gravity was diffuse. The top 10 companies, the darlings of the day, accounted for less than 30% of the S&P 500's total market capitalization. When the tide reversed, the pain was widespread, but the collapse was not instantaneous. It was systemic unwinding. Now, fast forward to the present day. The financial atmosphere is thin. Our air is dominated by the Magnificent Seven: Amazon, Alphabet, Meta, Apple, Microsoft, Tesla, and towering above them all, NVIDIA. These 7 companies now represent an astonishing 35 to 42% of the entire S&P 500 market cap, a level of concentration unparalleled in modern finance. This is not just market dominance. It is market singularity. If these 7 giants stumble, they don't just pull down the NASDAQ. They threaten the stability of nearly every balanced index fund, every pension portfolio, and by extension, the perceived health of the entire Western economy. This is a stability built not on a broad foundation, but on the tensile strength of 7 impossibly overloaded columns. The old bubble was built on hope. The new mania is built on a very real, tangible, and indispensable asset: compute power. And that difference introduces an alarming layer of complexity: the architecture of hype. The value of the AI titans is not derived from mere speculation. It is driven by an arms race, a zero-sum contest to acquire the physical substrate of AI, the graphics processing unit, or GPU. This is a new gold standard, and its central bank is one company: NVIDIA. The enormous spending of the Magnificent Seven, hundreds of billions committed to infrastructure, is not being spent on billboards or Super Bowl ads. It's being spent on specialized chips and the cloud services built around them. This has birthed what analysts have chillingly labeled the AI money machine, a self-reinforcing, circular flow of capital that artificially inflates revenue and masks true profitability. Consider the partnership announced around OpenAI's Project Stargate. OpenAI, the pioneer in generative AI, commits up to $300 billion for cloud computing infrastructure with a provider like Oracle or Microsoft over a period of years. This commitment is recorded as a massive future revenue stream for the cloud provider. Step 1. The cloud provider, e.g. Oracle, takes this immense cash commitment and reinvests it immediately into its own infrastructure. Where does that capital go? Step 2. Straight to the chip maker, NVIDIA, to acquire the necessary high-demand GPUs. NVIDIA records tens of billions in new sales and revenue. And then the final crucial step. Step 3. The chip maker, NVIDIA, armed with its exploding market cap and cash reserves, invests up to $100 billion directly back into the AI company, OpenAI, sometimes in the form of cloud credits or infrastructure access, but crucially as venture capital. The money begins its journey, makes one loop, and returns to its origin, generating vast, theoretical revenue for 3 different entities in a single, perfectly closed system. The companies are effectively paying one another to maintain the velocity of the hype. This closed-loop system is genius, but it is financially corrosive. It allows companies like OpenAI to achieve staggering valuations, hundreds of billions of dollars, while still posting massive, recurring operational losses. The underlying premise is that one day, the utility will justify the valuation. But what if the utility hits a wall? The financial engineering of the AI money machine is running headlong into a very real scientific constraint: the data wall. The engine of current generative AI is large language models, which require oceanic volumes of data for training. For years, AI consumed a vast, unstructured archive of human knowledge: every book, every public web page, every digital conversation. Experts project that by as early as 2027, the volume of high-quality, non-redundant, human-generated data will be nearly exhausted. The ladder of exponential improvement will turn into the slow, square-by-square march of conventional progress. This is where the geopolitical dimension crystallizes. The data wall turns what was once an academic concern into a national security crisis. In the 21st century, data is the new territory. And the geopolitical arms race is no longer simply about building more advanced microchips, though that contest remains vital. It is about controlling and generating proprietary, high-quality datasets that can scale beyond the public archive. This includes classified intelligence, closed corporate data, and the sensitive biometric and consumption patterns of entire populations. The value of a company like Microsoft or Amazon, therefore, is not just in their technology. It is in their unassailable access to human experience at scale, the living, breathing data that other nations cannot replicate. Money, as always, is merely the mechanism of power, and the current AI acceleration is inextricably linked to the escalating strategic rivalry between the United States and China. This is a competition fought on 3 concurrent fronts: the Silicon Frontier, the fight for supremacy in advanced semiconductor fabrication. The U.S. export controls on high-end NVIDIA chips are not economic policy. They are acts of strategic deprivation, intended to slow the pace of China's military and commercial AI development. This scarcity war drives up the price and value of the limited supply chain, further concentrating wealth in the hands of the very few Western companies permitted to trade them. The talent drain, the global war for top AI researchers and engineers. Nations are treating advanced degree holders not as immigrants, but as strategic assets, offering fast-track citizenship and immense funding to secure the human capital required to write the next generation of algorithms. The digital Silk Road, China's rapid deployment of digital infrastructure across the developing world, from Africa to Southeast Asia, is not merely an investment strategy. It is a long-term data collection play. The digital pipes they lay down serve as future conduits for proprietary, high-quality data to feed their models, bypassing the Western-dominated data wall. The financial volatility of the AI bubble is therefore not a domestic issue. It is a geopolitical risk multiplier. When the valuation of the Magnificent Seven becomes so intrinsically linked to national pride and strategic dominance, the state itself is incentivized to prevent a collapse. A dot-com-style crash in the AI sector today would be viewed not as a market correction, but as a strategic vulnerability that could be exploited by rivals. This intertwining of the market, technology, and national security introduces a prospect of a new Bretton Woods system, where the value of a nation's currency is not pegged to gold or oil, but to its compute power and its control of the global AI infrastructure. The currency of the future is the teraflop. The most enduring myth of every financial mania is the phrase, This time is different. And in one crucial way, the architects of this age are right. The original dot-com leaders sold mere access to the internet. The Magnificent Seven are selling the intelligence that runs the internet, the economy, and the future of work. Their profits are real, their utility is profound, and their concentration of power is absolute. But the history of money teaches us that when valuation detaches from tangible reality, when the expectation of future growth becomes a financial instrument in itself, the architecture is flawed. The AI money machine is an elegant, circular logic that generates revenue for participants, but it does not generate sustainable, broad-based wealth for the economy at large. The algorithm of empire is running. It is concentrating power and wealth at an unprecedented rate, creating a chasm between the few who control the compute and the many who must purchase its services. We are watching the creation of a new, high-tech, global digital aristocracy. The money is not just the center of humanity. It is being used to build a new, centralized operating system for humanity itself. The collapse, when it comes, will not be the bursting of a bubble, but the violent shifting of a continental plate. And only those who understand the true architecture of power will be prepared for the seismic change. If you came out of this feeling smarter, or maybe just a little more prepared, hit that subscribe button. We'll continue to track the forces shaping tomorrow, from global currencies to your personal budget. Thanks for watching, and we'll see you next time on BRICOIN by Adam and Ada.